We have got to get inflation behind us. I wish there were a painless way to do that. There isn't.
The chairman of the Federal Reserve just had a meeting today that rocked the crypto markets, and for you and I to invest properly, we have to know what the heck he talked about. So in this video, I'm gonna give you the highlights and my lizard brain interpretation of them and how they relate to the crypto markets.
Today, the FOMC raised its policy interest rate by 0.75 of a percentage point, and we anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%.
Jerome Powell, who's the big boss daddy of the Federal Reserve, he said he will not stop increasing interest rates until we reach 2%. And in this next clip, he is giving his forecast, his predictions on the GDP for the United States.
As shown in our summary of economic projections, since June, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year. The median projection in the SEP for total PCE inflation is 5.4% this year and falls to 2.8% next year, 2.3% in 2024, and 2% in 2025.
Have you ever had someone tell you your future is not looking good? No, not you, just me. That's basically what he's saying here. He's saying that they are predicting a 0.2% increase in growth this year and a 1% increase in growth next year. What does this mean for the crypto markets? That means we're not growing, okay? The crypto markets are a risk on asset, okay? When things are growing like crazy, that's when the crypto markets are gonna start picking up a lot of steam, a lot of market cap, these things are gonna be increasing. But he's saying that's not this year and that's not next year. So what we can assume from this, at least from my just, lizard brain simple understanding it, is that I'm not expecting a lot of big growth from any crypto this year or next year.
We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective.
When I was a child, I was punished and spanked by my father, who had a big rod of discipline, is what he called it. And he told me one time, he said, "I'm gonna spank you, Aaron, 9 times." And I was like, no. It was such a long, drawn out, butt whooping. I swear, I didn't know when. I just blacked out at some point. Maximum fear levels were hit. That's essentially what Jerome Powell has promised us. He said that this will be a sustained butt whooping. This will be a sustained downward pressure on the economy, on the markets. There will be more pain involved. You are in for more pain. This is going to be sustained. You will be hit hard. You will cry.
And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and the evolving outlook for the economy. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. Reducing inflation is likely to require a sustained period of below-trend growth. We will keep at it until we're confident the job is done. The FOMC is strongly resolved to bring inflation down to 2%, and we will keep at it until the job is done. The chances of a soft landing are likely to diminish to the extent that policy needs to be more restrictive or restrictive for longer. We have got to get inflation behind us. I wish there were a painless way to do that. There isn't. We want to act aggressively now and get this job done and keep at it until it's done.
Look what Jerome Powell just said. We're going to be aggressive until the job is done. It's going to be very, very painful. It's going to be sustained. Everything that he's saying, he's just warning us all. Look, this is going to be a period of sustained pain. I just need us to settle in on this. And it came to my sombering conclusion that at the beginning of this year, if you were thinking like, oh, I'm going to invest, and everyone was, because everyone got new money in 2021. Everyone was new rich in 2021, either in their house or their job or whatever. Money was just flowing so easily. 2022, the best thing that you could have done for yourself was to sit on your hands and on the pile of cash that you got in 2021. That was the best thing. Now, we're almost all the way through 2022. We have another quarter left to go. I think Jerome Powell is being very clear here. There's going to be much more pain involved, meaning the crypto markets are going to tank. When there's more pain in the markets, the risk on assets are going to be hit the hardest. And that's just crypto right now. Is it a hedge against, is Bitcoin specifically a hedge against inflation? Yes, I believe so, but not right now. It's the right product, but the wrong time. And that's why you stack sats right now, is because the time will come where it will be, and it might be too late because it might be too expensive. So let me just put that to the side right now. But that doesn't mean Bitcoin will take a serious beating in the next coming months, if not years, by their prediction. If growth next year is only 1% and it turns out to be a lot less than that, you just got to know that Bitcoin's going to be down at lower levels for sustained periods of time. He said it himself. See, because crypto is attached to the stock markets, and the stock markets are attached to the money printer, and the money printer is controlled by Jerome Powell, and he is telling us exactly where it's going to go: down. So what does this mean for lizard brain cowboys like you and me? Well, in my opinion, I think we should be doing two things. Number one, if we buy crypto now, we should be buying with a 2-year mindset. That's at least what Jerome Powell said. He said that at least all of this year is going to be very, very painful, but at least next year is going to be a lower growth rate. But we should be looking at a 2-year time frame when we're buying crypto. And number two, build. To me, there are 5 places where you can build. Number one is your skills. I would think that play to earn video games would be in this category. You're building skill sets to play to earn something. Number two, build an asset like a business. Probably build a business. You could be even a crypto business. Number three, network and build relationships. One of the most powerful things that I've learned is that a contact equals a contract, and contracts equal money. Number four, you should probably build some more money. So if it's working harder at work or building that asset or whatever, I think that one option would be staking. Like if you staked your coins and you earn that passive income back, that might be a good thing, because we know that later, maybe that ADA, maybe that Ethereum will be worth more in the future. And 5, build your understanding, build that knowledge base in here. If you don't know about crypto, I think you should learn more about crypto, because when a bull run comes, you need to be prepared. Thanks for watching this video. My name is Aaron. I'm just a lizard brain cowboy, not financial advice, but I want to invite you to join the Saloon. That is our Discord channel. Links are all down in the description, and I'll see you in the next video.